The New Zealand Canadian dollar on the weekly chart is in a downtrend. Now, the current state of play is that it's coming up in towards what might be regarded as a support area between here and here. Sorry, a resistance area. More specifically, this area here. Um, we have a scenario where we've broken this potential resistance. What was potential resistance as a level. We've taken out old highs. So this is a market that wants to run higher. And of course, you've got this trendline resistance that it could be targeting up into this area. If we draw a Fibonacci on that move, well, the original move bottomed out there and continued into here. So we'll use the lowest point of that range, and we're coming up. We've burst through the 50% mean reversion of that range, and eyes over here on the 78.6 for a continuation. Keeping in mind that we are leaving behind this support block. So we're moving out of that, but we might see a pullback for the next move higher. So this is enticing higher time frame traders into the move as it penetrates 83, the figure. Well, there will be stops. So we've squeezed out all of that position on the downside. This could be running into potential resistance 83.20s. If we just look left across the charts, this was an area of support as well prior. So it's an area of presumed resistance. So as we approach that area, I'd be cautious in anticipation of a pullback before coming back up on the daily chart. Bearing in mind that we are creating a potential support, trendline support. Okay, that's on the daily, and that's the longer term outlooks then covered. If we move right down into what we're seeing at the moment on the hourly chart, strong move, breaking equal highs. Now, we did actually break this structure here. So if we box this out, sort of an area of consolidation, if you like, sideways price action, market grey for being neutral. So we were sort of sideways for a time. We faked out to the downside, pulled back inside, faked out again, and moved up. Given that we've attempted on two occasions to break the downside and failed, the there is an anticipation, therefore, that the market doesn't want to come lower; it wants to go up. and it's going to stay up. So any pullbacks might be shallow in that respect. So you've got this over here as potential support on a pullback. This area here, pull it across. So this is broken resistance, turn it green as support. Now this is green as support again. So we're targeting over here currently on the upside, 83.30. Which aligns with, so let's pull this all the way over to there. To that low. There. So we're targeting 83.30 currently, but I'll be wary of a correction at some stage, and this area to be support. And then if we break below there, so we'll mark that as support, potential support, and I'm just going to mark off these highs, these swing points as potential supports if the market wants to come back in. The inside. And then the Fibonacci can be used as a guide. So this run isn't done yet. We don't know that this is going to pull back. I'd want to see a pivot point form, so a high with two lower highs either side, so 5 candles in total. Mark up the highest point as the high of the rally, so it could be here, could start there, it could be higher up. Let's pull it up to where we expect the market to go to, 83.30. And we want to see a 38.2 correction, so that lines up with our first level of support. A 50% mean reversion thereafter, and then a 61.8. So those Fibonacci's are all lining up with our anticipated support levels. So let's see how that pans out.